In my previous videos, I analyzed the cracks forming in the US dollar's dominance and the simultaneous rise of BRICS. Now, it's time to know how to take advantage of both. This isn't just a fleeting headline. It's a fundamental shift in the global economic landscape. And for the small investor like me and you, who understands what's happening, this could be one of the most significant wealth-building opportunities of our lifetime. Hi everyone, I'm George Economy, PhD economist, and in this video I'm going to show you exactly how you can strategically position yourself for changes ahead. We are not talking abstract theory, we are talking about your money, your savings, and your financial future. But before that, take a moment to subscribe to my channel. 93% of you, my dear viewers, are non-subscribers, and I know you can find some value from my videos. Also, this helps a lot the channel and the spread of such analysis to a greater number of curious minds. For decades, the global financial system has been built on the bedrock of the US dollar. This status gave the United States and its allies, mainly the G7 nations, tremendous economic power. Not long ago, the G7 commanded over half the world's economy. Today, its share of global GDP has fallen to around 30% when measured by purchasing power. At the same time, the foundations of this system are showing signs of stress. Western nations are carrying unprecedented levels of national debt. Inflation has been eating away at the value of our money, making it harder to get ahead. You've probably felt it at the grocery store, at the gas pump, and when you check your savings account balance. This isn't just a temporary blip. It's a systematic issue born from years of unconventional monetary policy. This system, once a symbol of stability, now feels fragile, and that fragility creates a real problem for me and you as investors. Your life savings, your retirement, your kids' education fund, they are all tied to currencies facing these long-term pressures. The financial security you've worked your life to build is sitting on this shaky ground of US dollar, the British pound, and the euro. So what does this mean for you personally? This isn't some high-level academic debate, to be honest. The shifting dominance of the US dollar and the instability in the traditional financial system have direct consequences. It's about the slow, quiet erosion of your wealth. Think of it this way. When the dollar's purchasing power declines and a US investor or resident, the real value of your savings falls with it. The 100,000 example you've saved for retirement might only buy what 70 or 60,000 does in the years to come. That's the real pain of inflation and currency devaluation. It's the fear that you can do everything right, save diligently, work hard, and still find yourself falling behind because the system itself is changing. And it's not just about defense. Being solely invested in Western markets means you might be missing out on the biggest growth story of this century. As economic gravity shifts, so do the opportunities for creating wealth. Sticking only to what's familiar is like choosing to fish in a shrinking pond while a massive, expanding ocean is right next door. Ignoring this shift isn't a strategy, it's a risk. And this is where the BRICS renaissance comes into focus. This isn't about predicting a collapse of the West, but about recognizing the rise of the rest of the world. BRICS is an economic bloc creating a parallel financial track, and for the savvy investor, this presents three key opportunities. First, you need to know who the players are. BRICS is no longer just a catchy acronym for Brazil, Russia, India, and China. It has undergone a historic expansion. Today, the core members are Brazil, Russia, India, and China, but also South Africa, Egypt, Ethiopia, Iran, Indonesia, and the United Arab Emirates. This expanded group is an economic powerhouse. When you include the bloc's partner countries, they represent about 56% of the world's population. Let that sink in. More than half of humanity lives in a BRICS-aligned country. Their economic might is just as impressive. The expanded BRICS bloc now accounts for roughly 44% of the global economy when measured in purchasing power parity, officially surpassing the G7. These aren't just developing nations anymore. They are home to booming consumer markets, vast pools of labor, and huge reserves of critical commodities. China is a manufacturing titan. India has a vibrant tech sector and the world's largest population. Brazil is an agricultural and resource giant. This demographic and economic weight is the engine of the BRICS renaissance. The second opportunity is to understand the new financial architecture that BRICS is building. This isn't just talk, they are creating real institutions to challenge the Western-led financial order. A key piece of this is the new development bank, the NDB. Think of it as the BRICS alternative to the World Bank and the IMF. Headquartered in Shanghai, the NDB finances infrastructure and sustainable development projects. Its portfolio of approved financing has already surpassed $39 billion. A core goal of the NDB is to lend in local currencies, helping members reduce their dependence on the US dollar. And this fits into the central theme of previous videos, de-dollarization. BRICS nations are actively creating ways to trade with each other using their own currencies, bypassing the dollar. They're also developing new payment platforms. A concept often called the BRICS Bridge or the BRICS Pay is being explored to create a seamless platform for cross-border settlements, which would further reduce the need for Western intermediaries like the banks and the SWIFT. And then there is gold. It's well known that central banks in countries like China and Russia have been steadily buying gold. But why is that? Because gold is a neutral reserve asset. It can be devalued by another country's policies or frozen by sanctions. This strategic accumulation is a clear sign that they are building a financial system designed for resilience and independence. So, how can a small investor like you and me actually tap into this? You don't need to be a Wall Street pro. The key is strategic, diversified exposure. Here are a few practical ways I think about it. First, it's the emerging market ETFs. Exchange-traded funds are one of the most accessible tools out there for small investors. While a single dedicated ETF for the expanded BRICS bloc doesn't currently exist, you can get excellent exposure through broad emerging market funds. Look for ETFs like the Vanguard FTSE Emerging Markets ETF, the VWO, or the iShares MSCI Emerging Markets ETF, the EEM. These funds hold a wide variety of stocks from companies across emerging economies with heavy allocations to BRICS nations like China, India, and Brazil. It's important to understand these give you broad, not exclusive though, BRICS exposure. Second, consider emerging markets bonds. Governments and corporations in BRICS countries, like everywhere else, often issue bonds to raise money, and they can offer higher yields than bonds from developed nations. An ETF like the iShares JP Morgan USD Emerging Markets Bond ETF with a smaller ticket, EMB, or the Vanguard Emerging Markets Government Bond ETF, VWB ticket, can be a way to add income and growth potential. These funds hold bonds from many different emerging markets, which helps spread your risk. Third, think about commodities. The BRICS nations are commodity superpowers, major producers of oil, gas, metals, and food. As their economies expand, their demand for these raw materials will likely grow. And as we discussed, gold is a key part of their de-dollarization strategy. You can gain exposure here through commodity-focused ETFs or by investing in companies in the resource sector. And let me give you a final word on risk. Investing in emerging markets comes with more volatility and political risk than you would find in developed markets. That's why financial advisors often suggest keeping it to a manageable portion of your portfolio. maybe in the 5-10% range. The goal isn't to bet the farm on BRICS, but to ensure you have a strategic seat at the table in the fastest growing part of the world economy. The rise of BRICS isn't an overnight shock. It's a slow, methodical and powerful realignment of the global economic order. The headlines often focus on the political drama, but the real story for investors is the powerful underlying trend: demographics, economic growth, and the deliberate construction of a new financial system. For me, the biggest risk is not seeing this shift for what it is. It's about playing the long game and recognizing that the financial world of the next few decades won't look like the one we have known and I personally have studied. By educating ourselves and positioning our portfolios thoughtfully, we aren't just protecting our wealth from instabilities of the old system. We are actually building a bridge to the opportunities of the new one. What are your thoughts on the BRICS nations? Are you already investing in emerging markets? Share your perspective in the comments below. Let's have a conversation here. Also, don't forget to subscribe. It helps both my channel and ideas like this be found by more curious minds like you. Coming up this Thursday, why a common BRICS currency is a terrible idea, and how can such a currency function well. See you all in the next one. Bye bye.